right, what you are about to watch may shock you in its accuracy in real time. We're going to go all the way back to October 10th during the flash crash in the crypto markets that first unfolded before we had this massive decline in the markets leading us to where we are now in the 80K region. I'm going to take you through the live analysis I made in the exact moment to members of Bull Market Blueprint, warning them that I could foresee something like this happening after that liquidations cascade that we saw on October 10th. You're going to see me in real time talking about how I am not bullish on altcoins, how I'd actually de-risked entirely from my altcoin positions at that particular time and was expecting a further downside move out of alts, and warned members heavily, if they still had altcoin exposure in the market, to become very, very cautious and also develop a bear market plan for their Bitcoin and their crypto holdings if we did indeed trend in that direction. This is the raw, unedited, unfiltered version of this live analysis, live call that I do for BNB members every single week. This one is from the week of October 17th. Enjoy. All right, team, welcome to the live call for today, October 16th. Of course, 1 week into one of the most odd weeks in crypto that I've ever seen, really. So I want to talk first of all about what happened this week in crypto. And then second to that, I want to talk about some of the implications, sort of where we go from here and calm everybody's nerves. The first thing I want to say is welcome to markets. Markets are not a straightforward process of investing. Investment markets are designed to challenge investors. And ultimately, that's where you make money in these markets, is by being on the right side of the challenges that they present to you and being able to move swiftly and really learn your lessons as an investor when it comes to risk management first and foremost. Also, with that being said, we're in a very good position. If you're anywhere in line with my strategy over the past couple of weeks, past couple of months, even better compared to a lot of other people in crypto that I've spoken with over the past week, not in a good spot, overly extended in altcoins, potentially using leverage and just holding like next to no Bitcoin at all, which is quite honestly concerns me when it comes to this current regime that we're in when it comes to crypto investing. Last Friday, a week ago today, we had Trump come out and announce 100% tariff on China, new threat. What happened from this point was the VIX was spiked immediately through a bit of downside volatility in the S&P 500. Again, the S&P 500 doesn't move down very much. Same with the NASDAQ overall compared to crypto, but a little move down. 1% or more is enough to start spiking the VIX when the companies that comprise the S&P 500 and the NASDAQ start to move down on these volatile moves to the downside. So the VIX starts to spike and we see a $1.5 trillion sell-off that happens in the equity market. This is the biggest sell-off that we've seen in equities since the springtime, which is actually totally fine and healthy for the equity market. There's really no problems that I see there because we haven't had any, bigger than 2% decline days at all since April. But the reasoning why Friday was so extreme for the stock market and, really what sort of carried over the contagion to the crypto market was the fact that the VIX spiked by about 30%. This is the 39th highest single day surge from the VIX. The VIX is the volatility index in the stock market. And there's a lot of funds, there's a lot of investors that use what we call CTA strategies, commodity trading advisor strategies. And these buy and sell based off of volatility. So when you're in periods of low volatility, like what we experienced sort of after the crash from the spring, volatility spiked and then cooled off aggressively over the following months throughout the entire summer. These funds load up on their positioning spot long because the volatility in the market is very low. As soon as the volatility starts to spike, that's where they de-risk automatically, right? The strategy is completely autonomous. So this is where they might sell stocks, do the opposite to hedge by buying bonds, and potentially even short their positions as hedges as well. So this big sort of spike out of the VIX caused the stock market to pull back really, really aggressively. And to be honest, with the amount of sort of like just straight and steady moves to the upside that the stock market has seen since the spring, some degree of pullback was warranted at some point to occur. So this is really nothing out of the ordinary or bull market threatening by any means, in my opinion. But the carryover to crypto is where it starts to get really interesting and a little bit scary for some investors, right? We saw a $20 billion liquidation event plus. We really can't even quantify the full amount of liquidations because the data is restricted. And 1.6 million traders were liquidated as this crash carried over into crypto. So again, Trump having this announcement gave the stock market a reason to become volatile, take profits, cool off a little bit. VIX spikes. A lot of these CTA strategies start to sell the S&P and the other stocks they're holding, and the market goes down and records its sort of biggest day to the downside in a while. On the crypto side of things, this cascades over into liquidations and forced selling for a whole bunch of other reasons, right? I mean, the stock market could have pulled back on last Friday, and crypto could have had a sell-off that was nowhere near this size. Except we had a couple of very unique factors that happened in the world of crypto. And, anywhere above 30 billion may be the real true estimate of liquidations that happened, because Binance, the majority of liquidations happened on Binance and Hyperliquid, only report one liquidation per second. Obviously, there's going to be a lot more than one liquidation happening per second with the volatility that we saw on a day like Friday, where some names were down 80%, in a matter of minutes. But the thing that I want to explain to you guys is that the stock market volatility wasn't really what crashed the crypto market. Okay. Binance's internal pricing oracle system was the main culprit here in terms of why we saw such dramatic moves to the downside in the crypto market, because there were pegged assets that depegged on Binance that didn't depeg anywhere else. So we have Athena stablecoin, which is USDE. This is supposed to trade always one-to-one with USD. It crashed by 35% and depegged, right? Stablecoins are not supposed to depeg. When that happens, you have problems. Then we had wrapped beacon ETH on Binance, went down by about 80%, and Binance Stake Sol went down by about 80% as well. What this depegging triggered was a cascading liquidation spiral. And essentially what happens here is this is like a death spiral of selling, where you have collateral valuations sort of registering the system at levels that would force a liquidation. Again, there was no change in the underlying value of USDE, for example, but on Binance there was an error here that happened in their code, and ultimately this was their fault, whether it was intentional or not. This is an omission that happened as a result of Binance in terms of the amount of forced selling in this market. So this creates a self-reinforcing feedback loop of selling. More sell pressure, deeper depegging happens, more sell pressure. It's all forced sort of as a cascade spiral. Then you have liquidations on top of that, which create even more forced selling, right? That's why there was such a violent move to the downside that wiped some altcoins quite literally all the way down to zero, and then back up to prices that they were at in April, or between April and now, let's say. Then we had automatic deleveraging systems kick in. So this forcibly closes positions that are winning for people to account for positions that are losing. The cherry on top is that this did not happen during equity market trading hours when institutions were actively trading Bitcoin and Ethereum, whatever else they want to trade. This happened just after market closed, and this amplifies the price volatility massively. If you look at the volume, I should have put a volume heat map in here, but there's too many things to cover. You'll see that there was a massive amount of volume that just disappeared from the price chart, like literally over the course of a few hours, and then came back into the market. So when you have ultra low liquidity, you have a liquidations cascade, you have depegging happening of crypto assets, it makes up for the perfect storm to crash the entirety of the market and literally liquidate almost anybody that had any leverage position open whatsoever in the market, which is the reason why this was the largest liquidation event ever in crypto. Very thin order books, very risky for traders with leverage, for altcoin holders. Of course, this is exposing weaknesses in crypto and exposing weaknesses in trading decentralized assets. Now, many people are throwing around, whether it was market manipulation or insider trading or exploiting, or was it an inside job by Binance to try and target Hyperliquid? I don't think we're going to know for some period of time. But what we do know is that there was an insider whale, most likely on Hyperliquid, that was able to short the Trump announcement. Whether this had any involvement with what happened after on crypto exchanges and this liquidation cascade, we can't really confirm. It could be a coordinated attack, right, to exploit the weaknesses that Binance had noted in their process for how they price stablecoins, specifically with USDE. We also saw $60 million of spot XRP dumped on Binance, which triggered a massive decline in XRP on the day as well. But the bottom line here is where this really affected the market was in the altcoins.
and in the leverage market, in the perpetuals. Again, perpetuals are synthetic trading contracts. They are not trading the real assets that are underlying them when it comes to looking at the price. So if you're trading link perpetuals or you're trading any perpetual future, you're not trading the actual underlying asset. You're trading a synthetic contract of which, right? So anyone who was trading with leverage, anyone that was holding massive altcoins that got caught up in this leverage liquidation spiral really suffered as a result of Friday. But Bitcoin, and for the most part, Ethereum held up pretty darn well across the board. I mean, Bitcoin held up tremendously well considering how nasty some of those charts looked. Ethereum very surprisingly well, in my opinion, for the size of the liquidations and for some of the moves that these altcoins made. And I really think that cements Bitcoin at minimum's role in crypto as being the most in-demand crypto asset by far. Ethereum can sort of share in that a little bit. But again, Ethereum's always going to suffer a little bit more downside and ideally suffer a little bit more upside when it comes to this market, just as the nature of it being more high risk than Bitcoin. Bitcoin did well. Ethereum did okay. Altcoins did terrible. Again, this was a black swan event for crypto. You can't predict something like this to happen. When a massive malfunction happens in the world's largest crypto exchange that liquidates almost every trader that has a position open, that's not really something you can account for in terms of predicted analysis. So I want to talk about the state of the current market now that we've kind of gone through what happened in the flash crash, because none of this stuff really matters. What matters is what happens going forward, because that's how we can make the most of this situation. So the current state of the crypto markets, as of today, is that crypto markets are still experiencing continued selling pressure and are really quite fragile 1 week after the crash. I saw some people that were very quick to get on Twitter and say, this is a generational buying opportunity. We're going to V-shape bounce right back to all-time highs. This was a great liquidation. It forced all the leverage out of the system. It wiped everybody clean. We can go up. If that's the case, then markets should have spent the entire week rallying back towards at least the mid-range. For Bitcoin, that would have been somewhere around the 115s to 120 region, right? For Ethereum, that would have been holding above 4K and heading back up to sort of the mid 4K region. And for everything else, that would be holding its bull market support band, or at minimum reclaiming its bull market support band over the week, which I haven't seen, technically speaking. So there is some argument to be made for derivatives traders positioning for a rebound, but the market has failed to sustain any of these rallies this week. You've seen the market rebound a little bit on Sunday and Monday, only to sell off, to rebound a little bit, to sell off more, to rebound a little bit less, and sell off even further today. So what I want to do first, because again, we're just looking at words here, we're not quantifying this on the charts. I want to show you guys the altcoin weekly charts so that we can dive into exactly what happened and sort of what this means from a technical perspective, because we have to put the technical and the macro and the fundamental of the situation all together to really understand the full picture of what occurred here. So let me just pull my trading view screen over, and then I'll switch to that, and I'll show you guys exactly what happened from a weekly perspective on the charts. And then we can dive in to what to do afterwards. So Bitcoin, as of right now, is trading below its bull market support band, heading towards its 50-day moving average potentially, right? Doesn't have to go there. It's not that the market couldn't bottom today, although I don't think that's the most likely scenario, but Bitcoin has broken its bull market support band, and it still hasn't broken its 50-week moving average. Okay, just to give you perspective, this moving average has held as support on all of the sort of major downside moves that Bitcoin's experienced so far this cycle. Now, if we skip over to Ethereum, for example, Ethereum is actually holding its bull market support band right now and is not really anywhere close to its 50-week moving average. Reason being, it was doing nothing for the longest period of time that most of its moving averages have been moving sideways, and the fastest of which, these 21-week SMA and EMA pair, which is the bull market support band that you can see here with the shaded region in the middle, was the one that caught up to the price the fastest. But regardless, breaking structure here. Now, when I skip over to the broader altcoin market and I look at a weekly chart, I want to just start off by showing Solana, for example. So again, I pointed out all these key levels at the beginning of the week here, right? We were trading at the, end of September into the first week of October in this candle here, in this range. What we saw after the weekend on Monday, when we could look at the weekly candle charts, again, or weekly candle closes again, I could say, is we broke down from those ranges that we've been trading in. And where Solana didn't break its bull market support band, now this week it's starting to trade below its bull market support band. And if you zoom in and you look at this red line, right? You can see this red line, and it's going to be on all the charts that I'm showing you in a second. It'll be a little bit hard to see, so I just want to outline it for people. All right, so just recognize that red line. That is the 50-week moving average. We do not want to see prices closing or even trading below the 50-week moving average to call this a bull market or an uptrend for this particular chart. What you can see is if you go back to the previous market cycle, and not all the coins were in the previous market cycle, but you look at this, when Solana was trading below its 50-week moving average, it was in a bear market, right? When we were trading below 50-week moving average in February going into March into April, this whole time, this is not a good sign. A better example of this would be to look at a chart like Link, which was around in the previous market cycle. And as you can see, here's the red line. When it started to lose its 50-week moving average and trade below it, we went into an extended bear market on this chart. So again, anyone who's making the argument that there's an imminent alt season coming is not understanding the fundamentals when it comes to looking at these charts to even make that assessment, right? We made a lower high over the summer in Chainlink compared to last Q4's rally. And now we're trading below bull market support band and the 50-week moving average as of right now. Now, it doesn't mean that the weekly candle is going to close here. It could pump all the way back up here and put in a very respectful rebound if possible, and that would change the direction of things potentially. But what we've already seen is just a massive drop through a lot of these levels on so many charts. I think XRP is probably the cleanest example. Broke below its bull market support band last week. This week it's starting to break below its 50-week moving average. If you want to go back to the previous market cycle and you want to look at this, again, the same exact thing happened here where eventually we broke through below the bull market support band. We broke below the 50-week moving average, and then it was resistance for the entirety of the bear market afterwards. Now, I'm not saying that all coins are going into an immediate 1-year bear market plus. That's not the analysis that I can jump to or conclusion that I can jump to right away. What I'm saying is that this is not a promising sign for most of these coins for holders to see this in the chart. You want to see these coins bounce off their bull market support bands like they have been on previous dips up until what we had happen over the past week. Now we're in the new week, right? And markets are selling off even further. We look at SUI, again, lost its bull market support band here, and it's trading below its 50-week at the exact same time. Not a sign of strength when most of these coins made lower highs over the summer period, which is why in the summer period I was cautious on alts and bullish on Ethereum because it wasn't the exact same setup, right? It wasn't the same setup that was occurring. We've looked at Link, we've looked at AVAX. These white lines that have been on these charts, these are just marking the trading ranges that they should have closed in last week or this week if we wanted to regain a bullish trend. AVAX is trading below its 200-week moving average, its 50-week moving average, and the bull market support band, right? Like there's not really any bullish argument that can be made for this chart when it's trading looking like this, in my opinion. So again, I'm not here to, spread fear or, make you guys emotional if you're holding any of these projects, but this is the technicals. And there's a reasoning why I've been against altcoin positioning for a long time now, because these charts are not showing us that they should be actively invested in compared to holding Bitcoin or compared to previously holding ETH, right? And I can go through all the charts and they pretty much all look the same, right? They do not look good. They do not look promising in any means. And there's not strength here. I'm not seeing signs of a rebound. Even Tau, which was really strong earlier this week, right? It had a bit of a pump, sold off completely, right? And there was a massive token unlock too, which I said, hey, be careful of this token unlock if you want to trade this coin, even though it looks strong, pull back, right? So I don't say these things because I'm a conservative investor or, I want to prevent you guys from entering altcoins that you think could go up and do multiples. I say these things because this is what the technicals are showing me. There's a time to get hyper invested in markets when they're really bullish and when the technicals are showing you upside. These technicals are not showing us upside, which is the reasoning why I did not rotate to any other altcoins going into Q4 versus just holding on to Ethereum, because again, not the same kind of trend on the weekly chart, right? Holding its bull market support band, nowhere near its 50-week moving average, putting in nice highs, new highs in the cycle. Most coins didn't even put in new highs over the summer period or over September. They put in a lower high compared to end of last year, early this year. So, not a very promising sign in my opinion. There's a couple of stronger outliers here that you could look at, but the risk to reward I don't think is in your favor, in my opinion. I just don't see it as being, Aster pulling back, leading the market down. I just don't see the risk to reward being in your favor with a lot of this stuff. You're taking on far too much risk, and The reward is just not there at the moment in these market conditions. When we look at Bitcoin, completely different kind of analysis. We'll talk about that in a second when I come back and do part 2 of the market update. Okay. But that's just the reality of the altcoin charts, right? So when I say things like this week talking about I'm not bullish on altcoins in any way, shape, or form whatsoever, I don't say that lightly because I'm looking at the technicals and I'm seeing what the technicals are telling me, and they're not telling me that there's any strength or any demand or any buying pressure in this market whatsoever after this week. That is like conclusive to me. Okay. So my overall conclusion is that the vast majority of the altcoin market looks to be entering or sustaining in bear market territory, right? I think for the majority of this market cycle, there's been a few names that have popped here and there. The majority of altcoins have been in a bear market compared to Bitcoin, or have even been in a bear market on their own US dollar charts. They're trading below their weekly bull market support bands. They're trading below their 50-week moving averages. There's a very, very small select outlier group of altcoins that are not doing this. Even then, the broader market is gonna, if it goes down further, I'm not saying it has to, is going to pull those names down and just sort of eliminate the risk to reward from being in your favor in this market altogether. Bitcoin itself is also on the verge of losing its weekly bull market support band. So again, I will revisit all of these charts on Monday after the weeklies have closed, and I'll do an update in the group and I'll post it via Loom for you all to watch and see. But if they haven't recovered back above their bull market support bands or back above their 50-week moving averages, you can assume that there's one confirmation of these crypto altcoin markets headed for a period of continued sluggish sideways downside momentum kind of moves. ETH is performing sideways against Bitcoin, so it doesn't look as bad, but it's not far off of its weekly bull market support band, and it has been underperforming Bitcoin. So again, why take on the risk for less reward? So where this leaves me is I'm here to partially conclude that there is no active spot long opportunity in this market when it comes to altcoins whatsoever. I don't see it. I can't see an actionable setup that makes me feel confident to enter. I haven't really seen them for ages over the past couple of months in this market, aside from Ethereum and aside from a few outliers for short periods of time. And even then, they run for a few weeks at max, and the market starts to roll over. So this is the time of the year from a cyclical perspective that we should be seeing strength in these markets, specifically from altcoins. If you want to be sort of like a cycle timer and you want to look at the 4-year cycle, which again, I don't even think is really relevant anymore. And I've been saying that for a while, but this is the time when we should be seeing strength in these markets, and we're not seeing any strength here, which again leads me to the conclusion that there's no spot long opportunities in the altcoin market. So capital that's sitting in this market is just standing dead in USDT, or it's standing in risk in the actual altcoin market when it's going lower, which doesn't really make any sense when the rest of the world isn't experiencing a mini bear market, right? The rest of the world's capital markets are doing fine in different sectors. Broader sectors are doing amazing. Even if you look at small sectors, there's a little bit of stuff that's sort of underperforming here and there, but not really. Equities are performing well. Metals are performing well. Crypto looks phased out. It doesn't look like it's getting a bid outside of Bitcoin and Ethereum, which is kind of what I've been talking about for a while, and why I was heavy on Ethereum over the summer versus Bitcoin and versus any other altcoins, is because it was getting an institutional bid, and it still probably will continue to get an institutional bid, but it doesn't mean it's safe from what's happening in the rest of the altcoin market right now, which does concern me. Okay, so this is my warning signal to anyone that is still invested in the altcoin market to understand that the technicals are not pointing to up. Okay. They are not telling us that the market is immediately going to rebound to new all-time highs in a lot of these names. It doesn't mean that the market can't do that, but from a technical perspective, it doesn't look promising as of right now. Again, we'll reassess on Monday and we'll see where things are at. In my case, I'm not holding any altcoins, so I'm not really concerned about anything. But the reason why I post this warning is because I know some of you guys are stubborn in the fact that you want to hold altcoins, and you've been holding altcoins over the past couple of months, or maybe for the entirety of this cycle, thinking that they will pump. And I personally just would not be in the camp of wanting to be stuck holding that bag if they continue to go down. I mean, I would ask yourself, for what reason? For what reason would you avoid trying to find opportunities in new markets that are performing well, that don't have as much downside and counterparty risk as what we've seen over the past week or so in crypto, and even the past couple of months? Why would you want to sit stuck in a dead meta, right? There's just no reasoning for that. I would say you're better off just holding Bitcoin if you want to have a lot of exposure to this market, or potentially holding a mixture of Bitcoin and Ethereum. I'm not against that. But the altcoin market as a whole doesn't look strong. There's very, very few signs of strength here in this market. And that means things could be going to a turning point, and maybe the market bottoms and starts to recover. But it doesn't seem likely based off of the performance that we've been seeing this whole year from altcoins. So I would just encourage anyone that I'm just warning you. I've been trying to warn you for months about having diverse, broad altcoin exposure. It's not in your best favor, or in your favor, in my opinion. And along with that, I've been warning very heavily over the past week or so since this started to unwind on Sunday, saying, hey, we don't know what we're heading into. It's better to be safe than to be sorry. And I think in a lot of perspectives, most of the market is in a position of sorry this week versus in a position of safe. So that's my sort of conclusion on where the market is at right now when it comes to altcoins specifically. Again, if you're going to ask me the direct question, should I sell my altcoins or not? That's a decision you have to make, right? I can't make that decision for you. I've presented all the evidence over the past week and even over the past months why I just don't believe most of these altcoins are worth holding in lieu of Ethereum or in lieu of Bitcoin. And now at this point, I mean, it's anybody's guess where the market goes from here, but the technicals don't look very good. So this is my warning signal. I hope a lot of you guys are not in a position where you're holding a bunch of broader altcoin names in this market right now. And if you are, I wouldn't get emotionally attached to them underperforming, right? Like, what are they doing for you other than potentially holding on to some pipe dream that they'll pump based off of what an influencer told you or whatever, what you saw on YouTube or anything, XRP included. They'll pump based off of what an influencer told you or whatever, what you saw on YouTube or anything, XRP included. Okay. Now let's look at Bitcoin, because Bitcoin matters. I'm a holder of Bitcoin and most of you guys are big holders in Bitcoin alongside me as well. In my personal view, I'm a continued holder of Bitcoin regardless of near-term downside potential if it happens in the market. I'm not saying the markets can't turn around from here. And I think if they do turn around from here, where you have your best shot of upside potential in Bitcoin or in the world of crypto is with Bitcoin and also with Ethereum and potentially some other select names. It's not going to be the broader market of basket top 50 alts, in my opinion, or top 100 alts. For me, I'm only interested in accumulating more Bitcoin. I want to see the Bitcoin balance in my wallet keep going up versus taking chips off the table, because there really is no guarantee, right? At some point, potentially there's a large rotation of capital heading towards Bitcoin, and Bitcoin starts to take off, and I could be left selling a position that I have to buy back higher with size, which I would prefer not to do. Again, I think of Bitcoin as a long-term savings account for myself. I don't actively trade it. I don't sell it to buy back lower. It's just not part of my strategy, and that's worked very well for me this cycle. Now, there's no guarantee that if the rest of the market continues to head lower, if this is an imminent sort of crypto bear market for altcoins and potentially for Bitcoin too, although I don't know what that looks like for Bitcoin in this new era of institutional demand and ETFs and Wall Street trading crypto. But for me, I don't really want to sell it, is the point that I'm trying to make. Second to that, I'm not encouraging that to be the view for everyone to take on. Okay. You must hold Bitcoin at your own risk level, your own degree of risk tolerance, your own level of comfort. You got to look at your goals. You got to assess your goals. Why did I get into this in the first place? If you're a new investor and you're looking to stack a lot more, well, a little bit of downside would be a good thing. If you've been in for a while and you have massive tax implications, if you sell, and that's something you don't really want to be hit with next year when it's tax season, then potentially there's another reason why you don't want to be a seller either. But if you've reached your goals by holding Bitcoin and you've performed well with being spot long Bitcoin, or you just don't have a lot of capital in the first place in this market, and you would prefer, not to experience drawdown or miss out on capital allocation opportunity costs elsewhere, then that's another consideration you might want to make. Hey, do you really want to hold Bitcoin going forward if it's not in an active uptrend? I think you guys know where I stand on this. I'm going to continue to hold Bitcoin. And I don't think that's actually a bad route to take for most people, because it locks up a segment of capital in something long-term that I believe will do well. And it forces you to find opportunities elsewhere at the same time. I'm happy to use all of my other idle capital and stable coins from altcoin holdings, stable cash in my current stock portfolio, and cash in the bank to invest in other markets. I don't need the capital from Bitcoin to invest in these other markets right now. But that, again, may not be the case for some of you guys in this group. So I'm not saying blindly follow me with this exact same strategy, but this is where I'm at. So if you're looking for sell signals on Bitcoin from me specifically in terms of me de-risking Bitcoin, you're not going to see any from my perspective, because I'm just not going to de-risk my Bitcoin position. It doesn't really matter to me in the short term. It's a long-term investment that I'm looking to add more to. Altcoins are not long-term investments. And I've been stressing this for a very long time now, that they are not long-term investments. They usually do not perform very well over the long term. They are short-term outperformance opportunities against Bitcoin. And lately they've been very few and far between overall. So portfolio updates that I've made this week, I don't think this will be news to anybody. But if you've missed all of this, you've got a lot to catch up on. I have reduced my risk across the markets in the past 8 days. I did 6 sells across my portfolios, and I'm still holding Bitcoin at the moment. So first, I de-risked Aster last Thursday as it broke technical support that I was watching, and I didn't feel like holding it into drawdown. Again, very good move. Aster's gone down quite a bit more than where I de-risked at. Ethereum, I exited in 2 sells, Sunday and Tuesday. And for me, that was really just based off of the fact that Ethereum was showing underperformance against Bitcoin, was rejecting some key levels on the chart that I was looking at technically. And I just didn't feel like having a lot of capital tied up in that asset if things continued to head south. With that being said, BitMine is a direct beta play of Ethereum. Again, I would be in and out of those together. I don't see why holding on to BitMine makes sense if Ethereum is underperforming the market. It's a risk management thing. It may not necessarily be the absolute best move to be out of that position, given that it didn't really even get a chance to catch up to Ethereum, but that also might be a signal in and of itself. MicroStrategy has been underperforming for a long period of time now, and I've been talking about de-risking that position for a while. I've given it as much of a chance as I possibly could to be flexible and let MicroStrategy go. And I cut it, and it's since broken support right after cutting it. So again, I got rid of MicroStrategy, and then today I de-risked half of my Coinbase, which is a long-term investment. I sold some in the summer around the high 390s region, and I sold a bit more today, half of my stack, to leave the other half left in my portfolio for a long-term hold. Again, I think if the altcoin market continues to suffer, which doesn't look unlikely, Coinbase will just make less money, and their earnings will just not be as good going forward. It doesn't mean that they didn't have good earnings so far, but I don't really want to be exposed in this entirety of crypto risk basket when there's other stuff going on in these markets. So again, I've put all the updates here. They're all in the group and announcements as they've been happening. And this is kind of the transition of my crypto portfolio over the week, right? Started off with holding full allocations in Ethereum after de-risking Aster to USDT. Then I cut my ETH by half. Then I cut it by whole. And then most recently, I've withdrawn half of my stable coins to convert to US dollars to move to my brokerage account to find other opportunities. This is a proactive move. Anybody who is concerned about investing in other markets versus just staying in the crypto ecosystem, my thoughts on that is you're just being naive, because staying in this market when it's underperforming is just a lazy approach to thinking that things will recover when there's no guarantee that they will start to do better anytime soon. And they possibly can. And again, there's an easy thing to do, which is just send the money back to Coinbase or whatever exchange you use. And allocate to more crypto when the time seems promising. I'm still going to keep a good chunk of cash in crypto ready to go for opportunities. But with that being said, like this transition on my behalf is a lot more work. It would be easy to just stay in crypto and throw in the towel for a couple of months and say, oh, there's nothing to trade. We'll just sit in cash. Or will low leverage short the market, which again, if you want to play with leverage, look what happened on Friday. People got liquidated on both sides of the equation, trading short and trading long, because of what happened with auto deleveraging. So overall, this is what I'm doing. This is what I have been doing. And it may be uncomfortable for some of you guys. Not many of you. I've really only heard this from maybe about a half dozen of you guys that are sort of unsure about transitioning to equities because you've only ever invested in crypto. I'm a native crypto investor, and I'm the one telling us all that I think there's opportunities in other markets, and it's a good thing to mature away from this. At least with the degree of capital that I have in this market, I'm not looking to see underperformance from altcoins, and I want to find outperformance opportunities to accumulate more Bitcoin. So that's what I'm doing. And for anyone that's sort of like, I don't know if I really want to get into equities, like I'm here for crypto. This is a crypto bull market. I'm just laying out all the evidence for you. Right. And I've been in this market longer than a lot of you guys, or just as long as a lot of you guys, I should say, full time. And if I don't see the opportunity, I don't see where you see it either. Now, my current portfolio positioning looks like this when it comes to crypto. So I've got about an 80-20 split of Bitcoin to cash that I can deploy in crypto. Again, if Ethereum starts to turn around or something starts to turn around that looks good and that is holding an uptrend against Bitcoin, that's what that capital's for. I'm happy to redeploy it and allocate it where necessary. Again, it's not me moving on from crypto entirely. It's just saying there's a chunk of capital that's just going to sit here if the market keeps going sideways or down anyways. And I'm going to move it over here to do something in a different market with it. So I am transferring half of that cash balance that's in progress right now over to this portfolio. And this is what my equity portfolio looks like today after selling half of my Coinbase position, which was 50%, is now 25%. I have about the other 3/4 in cash. And this is going to be a lot of cash balance in this account by Monday, most likely when I get these wires cleared. So for me, this is going to be the portfolio that I'm focused on growing and allocating towards if there's no immediate opportunities presented in crypto over the next couple of days or over the next couple of weeks. That doesn't scare me. I think that's just what investors have to do. When you find a lack of opportunity in one market, you pivot to a market that has opportunity. Charts are charts. They're easy to read. They're all the same thing. It's all the same analysis from my perspective. If anything, there's cleaner, more consistent, more realistic data in the stock market that I can build an even bigger edge with compared to crypto right now, which is just not giving us anything. So that's where I stand as of today. That's sort of where I'm at when it comes to things with portfolio positioning. Again, if you don't really have good banking rails between your crypto accounts and between your equities, or if you don't have any equities, we can help you do this. Ryan and I have been in this market for a long time. We've helped many members set up equity accounts, set up crypto accounts, bank accounts that are friendly for crypto. Even a lot of you guys, not a lot of you guys, but a couple dozen of you guys have moved to the UAE as a result of us and got set up with the same setup that we use here, which is flawless. So if you don't have any of this infrastructure set up and you need help with that, just reach out. We can help you. It's very simple. It's not complicated. We can figure it out for any jurisdiction in the world, whether you're in Australia, whether you're in Europe, whether you're in Canada, whether you're in the US, whether you're in Mexico, we can figure it out for you. We have the contacts and the capabilities to help you have a very similar setup to us. But for me, if there's opportunity that reemerges in crypto, I can just pull capital from my equities portfolio within 48 hours and I can move it back over to crypto. And a lot of you guys can do the exact same thing when it comes to this as well. So that's my current portfolio and positioning. I want to go into a macro update now, talk about where I see the markets based off of the macro data, and then we can get into market updates, and then you guys can ask me any questions that you want. Global liquidity at record highs. Really, what we're seeing here is this will be like this until the US dollar shows a meaningful uptick. It's sort of started to move up, but we'll see where it continues from this point forward. We just have to watch, right? Potentially, we're in a late liquidity cycle at this point, according to Michael Howell, who is the inventor of this particular analysis method. And that may be being shown in crypto right now with it, not performing very well. So we'll really just have to see where things go over the next couple of weeks and months. I remember just 3 weeks ago, I did a call talking about some of these late cycle liquidity risks and the fact that October would give us clarity. Are we going into the next leg of the bull market, or are we potentially hitting pause on the markets for a couple of months or a couple of weeks at the minimum? And really, I don't have immediate clarity on that, but I think we're headed more towards one direction versus the other, which seems pretty obvious to further downside in crypto markets and potentially equity markets. Again, we're kind of at the mercy of Trump. We're at the mercy of so many things. This has probably been the craziest year. I mean, I know this from my investing mentors that I'm speaking with week to week, and at this point, daily over this week, that this is one of the most challenging years in history when it comes to what markets are doing, what macro is doing, what the Trump administration is doing and their effect on markets, and just sort of what's been happening across the board. It's a very, very challenging investment environment. So again, if you're confused by this, that's totally fine. It's not meant to be easy. And it's my job to make it easy for you. Okay. We also have funding stress that's been happening across the market. You may have seen news headlines about regional banks not doing very well this week and bank stocks not doing very well. When the Treasury settlements have been halted, essentially, this drains short-term cash buffers at these smaller banks, and it forces them to borrow heavily from the Fed's facilities to stay liquid, which drains those facilities. Okay, so the bottom line here is that funding stress has been reemerging. as the government shutdown goes on, and it just raises the odds of near-term policy intervention or liquidity support, which again can be a very good thing. So my weekend homework is to determine if this stalls equities any further or is marking a buying opportunity for equity entries next week. That's my homework, is just to figure out how long this pullback could possibly happen if it's not over already when it comes to equities. With crypto, I don't think crypto and equities necessarily need to trade with a correlation right now because they haven't been since the summer. Crypto recovered first out of the lows into early summer and then traded sideways for the whole summer and started to trade down towards end of summer until now. Equity markets have just continued to keep going in the same direction, so the correlation is not necessarily there. So that brings me to charts. I want to review the whole sort of breadth of the market really quickly, and then we'll pause, we'll do a Q&A, and then we'll get into equities and what I'm seeing opportunity-wise there. So let me just switch really quickly to the trading view that I have open. Let me just move myself out of the way again. All right. So Bitcoin is where it stands as of now, below the bull market support band on the weekly candle. Again, this weekly candle is not closed. Potentially, there's an opportunity here for the bulls to step in and buy this all the way back up to the 113 region, and we close above the bull market support band, and that marks a bottom in Bitcoin. What I'm concerned about is that this really mirrors a lot of what I saw in February in terms of a flash liquidation that everyone calls a bottom at, and then the market continues to roll over from that point forward. We did see a massive move below the bull market support band that was bought up on Sunday of this week here back in February, right at the end of February going into March. And what happened the following week is the market just completely rolled over, right? So again, challenging times there, potentially challenging times here. But with that being said, we have the 50-week just right below us here, which ideally we should bounce from. And if we don't bounce from that, we have to be short-term cautious on this market as a whole, because that is a signal that there's more downside coming for Bitcoin. If you look at the previous market cycle, right, we always held the 50-week moving average until we didn't. And when we didn't hold it and we didn't hold the bull market support band in tandem, we were in a bear market on Bitcoin. This was a large decline out of this bear market. I don't necessarily know if that will be the case with this bear market if we go into one. It doesn't have to be because we have institutional buy pressure, and Bitcoin is much more popular, known, and desirable asset now than it was back in 2021 and 2022, but we'll just have to see. We got to take it step by step. So that's Bitcoin specifically. If we look at the daily chart on Bitcoin, I've got a bunch of levels that I can outline here. I'll do it on this chart. It's a little bit cleaner. But essentially, if I walk you through everything that kind of happened, right? We marked this point of interest on Bitcoin. Give me 1 second here just to find the paintbrush. So we had a low end of August, right? Then we came up and we put in a lower high overall, which is a caution signal when we're trading back down here end of September. And I was talking about this on a call. I was saying we need to really hold these lows if we're going to continue higher. And we did. We held and we formed a higher low actually, which went on to form a higher high. We started to get above the 50-day and the 50-day and the 20-day moving average. We got above these local highs here with a nice, strong, bullish engulfing candle. This was a very bullish week. And then we closed the most number of daily candle closes above this 120K region. And then we got a retest of this level, right? Unfortunately, Friday's events pulled us below where that retest was happening and really cemented this move all the way back through the 20-day and the 50-day in one day. There was no real room here to de-risk or to have any sort of signals of caution when the move happened in literally one day. And this was like within 4 hours of one day that happened right here. So unfortunately, sometimes the market just spanks you like that. And there's really nothing you can do to manage risk in the immediate term. But that's where bounces come into play. And the bounce always has to be studied in these markets because that's what gives you a lot of information as to whether the trend is going to continue to the downside or whether it's going to start to reverse back to the upside. So what I noted here was that Bitcoin came back up to the 50-day moving average, couldn't quite get to the 20-day, and immediately found resistance here, which also coincided with where it found resistance previously in September. It found resistance here at one point in August. And again, this was the previous price floor from July, price floor from earlier in August. And we were ideally cementing this area as a new price floor, but we didn't, right? So this was a bearish retest of this level. There was a rejection here, bearish retest of the moving averages. And then Bitcoin continued to falter below those levels. If we were going to have an immediate return, rebound in this market back to all-time highs that was bullish, we want to see ourselves break through and cement closes above both of these moving averages and back above this level here. We did not see that from the technicals in Bitcoin. That is where I started to get very cautious on Monday and Tuesday, given the fact that I saw a stall out at this level. Not a sign of confidence. over the charts. Now, when I look at Ethereum, similar kind of scenario here, right? Where we get rejected at the 20-day moving average. We don't even make it to the 50-day. And then boom, Ethereum starts to roll over pretty heavily. These moving averages are key. And when we get rejected at areas that were previously price floors, right? These were areas of support. This becomes new resistance again because we can't get through it. That is a bearish retest. That is a signal that the bears are taking control, and that, essentially what happened here is that sellers stepped into the market and sold at this area instead of continued to push it up by buying into the asset. So again, the technicals can tell us a lot in these charts, and that's what it told me, and that's why I got out of Ethereum. And I wasn't holding any other alts at that point. So again, that would have been my signal for getting out of alts too, which I stressed multiple times on the call or on the live, on the Loom updates that I've been posting in the group. So that's Bitcoin. I mean, if we look at alts across the board, I don't think Aster is really relevant, but Solana, lower high, Tau back, fully retraced its pump. BNB is now at its 50-day, below 20-day. It looks like it sold off pretty hard. TRX, lower highs. Zcash, not sure what Zcash is doing. Aster, new local lows. Monero, now trading below. So again, I just don't see a lot of strength in these charts. And if you do, feel free to show me where you see the strength in these charts. But from a technical perspective, I don't. I don't like seeing charts trading below 50-day moving average, trading below 200-day moving average. It's not a sign of confidence, in my opinion, right? It's not inspiring to want to long these assets when they're showing us these sort of signals. XRP, right? It did not hold its price floor. That has been the floor since August, right? Didn't hold it. Broke right through it. Bearish retested its 200-day moving average. So I really just don't like the look of that. And again, I think a lot of these wicks were incredibly damaging when it came all the way back down. Basically erased the entirety of the gains that a lot of these assets had in one candle, liquidated everybody, and then just exposed a lot of cracks in this market, which we can cover even in further depth next week, because I don't want to bore you guys with all of the details of this stuff on this particular call. But I don't think that liquidation was bullish, is the short answer to this weekly call, is that I don't think that was a bullish liquidation event that wiped out a lot of good leverage in this market that allows us to just immediately move higher. I think it was a trauma wound for the market, and I don't think it's recovering very well. I think it's still continuing to bleed out, unfortunately, which is fine in my case because I don't have exposure to this. But I mean, for some of you guys that do have exposure to this, I think you're probably learning your lessons, and that's what you came to this group to do. So with that being said, that's where I see crypto. Equities are having a mixed week across the board. Dollar is starting to rebound a little bit. We got to watch this. This is probably going to hurt global liquidity at some point if it keeps going up. So that's another caution signal. And everything else, gold is doing its thing. Gold's going crazy. Crypto equities, liquidated Coinbase today. Half of my position, I'll keep the other half as a long-term hold. BMNR, losing support, losing the 50-day now. And then MicroStrategy, again, I just didn't want to see it lose this price floor and pop in and stay holding this position, which is exactly what it's done now. So we'll really just have to see, right? Like today is a big telling day for these markets. Where does the equity market close in 5 hours from now? Where does Bitcoin close on the daily chart in 5 hours from now? Does it close back above the 200-day moving average? That would be a better sign. That would be my preference to start to look for spot long opportunities in this market, would be to see us closing above that level. So far, I just don't see that happening. But again, I'm not here to be opinionated about that. I'm just here to say, wait for it to happen and let's sort of see where we go from here. And Ethereum, same thing. Not cracking new lows in comparison to Bitcoin, which is cracking new lows from the sell-off. So that's one sort of leading indicator of confidence you could potentially say in Ethereum. But it's still, if you look at the ETH BTC chart, it's rolling over against Bitcoin and getting rejected at its moving averages. So I hope that covers everything when it comes to charts, when it comes to sort of the foundations of what happened this week in crypto. And if you have any questions, now would be the time to jump in and ask.